super excited about launching this next phase of what I'm doing. I have figured out that my clients really need 3 key services, and I've gotten really cute names for them. So sound mind, a sound shift, and a sound legacy. So let me say that again. Sound mind, a sound shift, and a sound legacy. Sound mind to me means people are getting the foundation really stabilized. So if you are coming in because your taxes aren't stabilized and you need to get caught up on different years, you want a peace of mind that all of those past notices are behind you. If you are a company, you're coming in because you need to have your taxes done, but your bookkeeping and your accounting records aren't not only up to date, but you really don't have a system in place. So I feel like starting with clients at that foundational level, the first objective is to give them a really sound mind so that we can move forward and start talking about shifting. What is the sound shift? To me, that is going from now that I am all caught up, how do I put in the tools and automations or the resources that I need to make my systems run better? So for example, oftentimes clients will come on the business side for accounting services, but they may not have payroll set up. They may not have an accounts receivable tool set up. They may not have a tool where they're actually paying bills from. And so having all of those things integrated in to make one big cloud of your end-to-end process is also super important. So I feel like I get an opportunity to work on clients in that shifting stage, the sound shift. I also have a lot of people who need to go from 1099ing people to W-2. And that is shifting into a whole new space. The first time having that awareness that you're not only paying someone, but you're paying the government. There's a lot of new reporting, annual notices that you'll get that you need to take care of. And so that side of that part of the face is really geared towards people who are, now that they've gotten everything taken care of that was outstanding, what are some of the things that they need to put in place? So after we've had a chance to work on that, making sure that all of your systems, your end-to-end, you have the right teams and people in place, that process is working. The next phase is into the sound legacy. Now, these are for my clients who are really now doing sales on their business and they're looking to have expansion. And so they're looking for things such as how are they going out seeking corporate sponsorships. They're looking for financing, corporate financing. They're evaluating things like lines of credit, or they're even idea in things like taking their company public. Like how do their financials need to show and be reflected in order to start having those conversations about going public? So that sound legacy is also on my tax side. It's for clients who are looking to take their tax situation and really address something that is coming in the near future. So for example, I often have people who have just received estates, real estate through estates, or they've had a loss in their family during the year and that they know that this transfer of estate is going to happen. And so for me, that shift is really allowing people to start saying, from a tax planning standpoint, when I transition, how are my accounts situated so that the other people I'm leaving the money to won't receive this money taxable? Am I planning for that tax consequence? Are we talking to our parents about and our siblings about if something happens to mom and dad and we inherit the house? Is our plan to sell the house? Is our plan to keep the house? What do those financial decisions look like? Because people would be surprised, but just about everything that happens with your money has some kind of tax implication. I feel that the greater emotional impact it has on you, it usually will have the greatest amount of financial impact as well from tax, because it's so closely connected with, you think that one outcome is going to happen with money, but then it feels like people are always like, but those taxes crept in, or I didn't plan, enough for tax. I made all this money, on a 1099 and can't believe this much tax is due. I see a lot where people make partners in their firms. And when you become a partner now, you receive a Schedule K-1, and on that Schedule K-1, that income hits differently as does 1099 income, because you can't write off expenses against it, whereas on your old reporting on the 1099, you're able to deduct things. So there are shifts in terms of how I feel like as people grow in their tax complexity, we need to start planning and working things a lot more differently. So that's kind of what I'm working on in that space around tax legacy on the Sound Legacy platform.